The greatest financial maneuver in modern history has just been executed right under the nose of the Federal Reserve. For the past 6 months, analysts around the world have been confused by one simple question. Why was China rapidly dumping US Treasury bonds? Trillions of dollars worth of American debt was quietly being unloaded, and no one in Washington seemed willing to explain where the money was going. Today, the answer is clear, and it spells serious trouble for the future of the American economy. China wasn't just selling U.S. debt. It was systematically swapping paper promises for physical reality. Hundreds of billions of dollars in treasury bonds were exchanged for real assets, primarily physical gold. This was not a trade for profit. It was a strategic survival move. In what can only be called the Great Swap, China traded America's debt for global wealth. While the United States is left holding inflation and obligations, China is positioning itself as the architect of the next global monetary system. For decades, China was the largest foreign creditor to the United States. By buying U.S. debt, Beijing helped subsidize America's lifestyle: low interest rates, massive deficits, and cheap consumption. That era is now over. The data confirms a historic pivot. China recognized that the US dollar had become a weapon, one that could be turned against any nation holding it, just as it was used against Russia. Rather than wait to be targeted, China chose to de-weaponize the dollar by converting its reserves into gold. Gold cannot be frozen. It cannot be sanctioned. You cannot shut off a gold bar sitting in a vault in Shanghai. This single reality explains why gold prices continue to rise even as interest rates climb, something that should not happen under normal conditions. Gold is soaring because there is now a buyer who is completely insensitive to price. China does not care if gold is $2,000 or $3,000 an ounce. This is not speculation, it is preparation. By dumping a depreciating asset, the dollar, and acquiring an appreciating one, gold, China is front-running the collapse of the fiat currency system it helped build, and the consequences for the United States are severe. If China stops buying U.S. debt, the Federal Reserve becomes the buyer of last resort. That means money printing on a massive scale. Debt monetization is not a theory. It is the direct road to currency debasement. This inflation isn't abstract. It shows up at the grocery store, at the gas pump, and in rent payments. China is exporting its inflation back to the United States. At the same time, the petrodollar system, the foundation of dollar dominance for the last 50 years, is breaking. China is now paying for oil in yuan, and that yuan can be converted into gold on the Shanghai exchange. For the first time in generations, nations can trade energy without touching the US dollar. As demand for dollars collapses, trillions will come flooding back home, chasing fewer goods. This is the Triffin dilemma unfolding in real time. Washington knows what is happening, but silence is their only option. Admitting the truth would spark panic. Yet the charts tell the story clearly. As foreign bond holdings fall, gold rises in perfect correlation. This is a one-for-one transfer of value from west to east. China's true gold holdings are likely far larger than officially reported. As the world's largest gold producer, China exports none of its domestic supply. On top of that, massive imports flow through Hong Kong and Switzerland. Analysts estimate China may already hold over 30,000 tons of gold, far more than the United States. If Beijing ever announces a gold-backed currency, it would instantly become the strongest currency on Earth. This move sends a signal to the rest of the world. Nations like Brazil, India, and South Africa are watching closely. Central banks have already responded, buying more gold last year than at any point in the last 55 years. They are voting against the dollar with their balance sheets. For the average American, this means a declining standard of living. A strong dollar allowed the U.S. to import cheap goods. As the dollar weakens, everything becomes more expensive: electronics, clothing, cars, food. The privilege of issuing the world's reserve currency is being revoked. China timed this move perfectly. While the US is distracted by internal division and foreign conflicts, physical gold is flowing east, and it is not coming back. Western markets are dominated by leveraged paper gold, while China controls physical supply. When paper claims fail, trust in the Western financial system will collapse. This strategy extends beyond gold. China is accumulating silver, copper, lithium, uranium, oil, and farmland, real assets that power an economy. The US, by contrast, is built on debt and financial engineering. In a crisis, you cannot eat debt. You can trade commodities. Ironically, American policy created this outcome. By weaponizing the dollar, the US forced rivals to build an alternative system. China didn't destroy the dollar destroyed itself. China is simply removing the valuables before the collapse. The message is simple. Follow the smart money. The world's second largest economy is abandoning dollars and buying real assets. They see what's coming. The window to act is closing. As the dollar falls, gold prices will move vertically, and access to physical metal may disappear entirely. The narrative that gold is a barbarous relic is dead. Gold is now a Tier 1 asset under global banking rules. Basel III confirms it. China confirms it. Only those who ignore this shift will pay the price. The Great Swap marks the quiet end of American financial dominance. No tanks, no missiles, just balance sheets. The debt is in Washington, the gold is in Beijing, and the consequences will be felt in every household. The world has changed. Adjust or be crushed by the reset. DE.